morning, good afternoon, good evening, traders from across the globe, and welcome to the 948th edition, 948 YouTube videos geared to help teach you the art of technical analysis, to help you become a better analyst, which hopefully will help you become a better trader. That's what each and every one of these videos are geared towards. This video being filmed on Thursday night for trading Friday, November 16, 2012, happens to be, as I said, video 948 in a long series of videos that just keep coming at you. Traders, I am Oscar Carboni. I have spent most of my life in this business, a lot of it down on the trading floors, and the old pros down on the floors have taught me a lot of tips, tricks, and techniques that I share readily with you in these videos, so pay attention to these videos. All right. Futures trading can be extremely risky. As we know, it can cause substantial financial loss. It is not suitable for all trading accounts. And if you do not recognize that a stop is your best friend, you should not be trading. For you traders that recognize stops are your best friend and know the risks, let's get moving, rock and roll, and no clapping for another red OMNI for going into Friday. This red OMNI is for the ES, the NASDAQ, the soybeans, the sugar, maybe the oats even. That doesn't really look very good right now. What we have found is that the markets or the charts themselves have bear flag syndrome. The bear flags are all over our charts. Now, they're in financial charts, they're in agricultural charts, they're all over the place. So, it is bear flag syndrome, and as we know, the bear flag, which ends up looking something like this when the market is done with it, usually produces a down move. So bear flag syndrome is what this is about, and I will show that to you very shortly in our chart segment. Traders, export sales report, big report comes out tomorrow morning at 8:30 a.m. OST. We say soybeans and oats, the report's already baked in, and it will be bearish for soybeans and oats because they have bear flag syndrome and look like they are breaking down. So we say, do not worry about that report. Expect that report to be bearish because the charts are telling us that report will be bearish. And we know that fundamentals always come out in the charts first, and then we know that word always, it's a fine art, not a science, so it's not always, but if you use the mentality that fundamentals always come out in the charts first, and you act that way, you will find that in most cases that will have been what happened. So, what the chart tells you is almost always what the fundamental news will be released in the public after the chart shows you that formation. We know that's how it works. Export sales for Friday, we still think that the soybeans can be sold and the oats can be sold even though export sales are coming out. We shall see what happens. We think the sugar goes down, and traders, S&P, NASDAQ, what I want you to recognize is this. For several weeks now on our board, we've had do not fall in love with the downside crossed off. A big red circle and a line through it. It's been that way for several weeks. This video, I'm here to tell you a red arrow for Friday for very short-term trading. Yes, still bearish. At the same time, I'm going to show you some charts at a slightly longer-term view in this chart segment. Those charts tell me to tell you that this will not last too much longer. Major support is going to be tested soon, and it is likely that major support is going to hold going into next year. I will show you what I'm talking about now. Traders, with no further ado, let's go look at some charts. Traders, bear flag syndrome, the bear flag, the syndrome. It just continues to repeat over and over again. So, we have bear flags in the oats market. So far, this bear flag worked very well. We had, boom, a big long down day, another long down day, and then a third one that constitutes the next flagpole. Then this parallel channel off to the right, slightly up, constitutes the inverted flag. Down we go for the bear flag. So the oats has bear flag syndrome. Looking at soybeans, started off with the shoulder, head, shoulder. Now we have a bear flag right here. We feel this bear flag will break tomorrow when that report comes out and finally get to our target. Traders, do you remember when I placed this target on this chart, and I've been showing this to you in video after video? We were all the way up here. We gave you this target. Look at how close we are now. We're down to here. And all we have to do is make it there to hit our target. Looks like soybeans will continue with the bear flag syndrome and reach our target most likely on Friday. Then you have the sugar market, another agricultural market. Traders, look what happened here. You had a shoulder, head, shoulder. Goes into a parallel channel. The end of the parallel channel puts in a bear flag. That bear flag produces another drop. Here we are today, present day, shoulder, head, shoulder. Goes into a parallel channel. Here we are with a bear flag. We just broke out of the bear flag on Thursday. It looks like Friday you spend some time heading down, just like you did here. So there is our bear flag syndrome in the agricultural markets. Let's take this to the NASDAQ. Shoulder, head, shoulder. This head ends up in a bear flag right there. Then we break down and another bear flag right here. We get through the 200 bar moving average and through this bear flag. And we go into this parallel channel. The parallel channel looks like it will continue a bit longer. And up close and personal trading for Friday, that's what it looks like we're going to get more of, the down arrow. Then you look at the DAX. The DAX has turned to the dark side. Shoulder, head, shoulder, shoulder, head, shoulder, shoulder, head, shoulder. So there's literally 3 of them in a row. And then it proceeds to break down. Now it's below this major support line. And it is sitting right here. So this parallel channel looks like it's going to work a little bit longer. So for up close and personal trading, very close, like day trading. For Friday, maybe Monday, looks like you can go a little lower. Then we look at the E-mini S&P. The E-mini S&P has a bear flag here, another bear flag, although it looks sort of like a pennant flag, but another bear flag there. Gets below the 200 bar moving average, and traders, we told you all week this was going to happen. There it is below the 200 bar moving average. The follower has breached it. Now that we've had our second bear flag for the bear flag syndrome, we expect the market to go a little bit lower and follow its leaders down. So that's if you wanted to look at short-term opinion. But then when we start looking at slightly longer-term opinion, like we have in the Dow Jones Industrial Average, pull a weekly chart and look at this. Back to the lows in 2009, the S&P 666 low. Well, this was the Dow. Remember the low it made under 6,500? Here we are. Well, since then, we've come up on a weekly bar chart. That support will be tested if we come a little bit lower. We get down here and right across here, that support gets tested. I have a note I've left on a chart for the last 3 or 4 months. That note says, buy this eyes closed when it comes. So that's the Dow Jones Industrial Average on the weekly, looking smart right there. Let's look at another weekly chart now. This is longer term view. Remember, when looking at a weekly chart like this, it is a long-term view. So do not forget that. We're not looking at tomorrow now. So the long-term view on the weekly bar, support, 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 and it is right down here. If we come down to that on the NASDAQ, I believe that holds, keeps us in the big bull market that we've been in for quite some time. Nothing wrong with a customary pullback in a big bull market. What do I mean? Bull market, pull back. Bull market, pull back. Bull market, pull back. Bull market, pull back. It's customary. It's what happens in a bull market. As long as we stay somewhere inside of this red line or just a little bit through it, but not much, we should be just fine using a longer term view. Traders, pull your own charts, look at your day charts, then go look at your weekly charts. Make sure you recognize that we have been in a big bull market for quite some time, and we are experiencing a pullback, not a crash. So, traders, you've seen the charts, and there's my technical argument for why bear flag syndrome is on the board. Why we have ES NASDAQ looking lower, why we have some agriculturals looking lower, and that's what we'd expect for trading on Friday. Then we did our longer term weekly view, and you can see there is some support, and this thing should gain legs because let's face it, traders, when you have a chart and that chart starts all the way down here on the bottom left of your computer screen and works its way all the way to the right, that's a bull market, even if you're in a pullback. Right now, that's what our market looks like since 2009. You don't call that a bear. You call that a bull market experiencing the pullback that we've been in for the last 2 or 3 weeks. That's all I'm looking at for now. I'm probably going to take the red circle and the do not fall in love with the downside cover back off and say, let's not fall in love with the downside, probably getting into next week. Now, next week brings another case of, or another scenario completely. That scenario would be holiday reversals. We'll deal with that next week. For Thursday night into Friday, we've got the red arrow. At least for the early part of the day, we want to go short. Once we get out, we're probably going to stay out because it's Friday, but we'll take that hour by hour. Traders, I will see you at livewithoscar.com. Come on down to my chat room. It is free. It's a live chat room. I am there. I will help you learn the art of technical analysis, learn how to apply it towards markets moving forward, because that is what you want to be good at. Anybody can get in front of a camera and tell you what happened yesterday. Big deal. How many can get in front of this camera night after night like we do and tell you what happens tomorrow with the level of accuracy you have seen? Now, of course, not every video is going to be perfect. You've seen me shot and stabbed and beat with bats and hung, and you've seen me get abused on those bad videos, but there's been many more good videos than there have been bad ones. So keep your eye on the OMNI. Keep your emotions out of trading. One of the best things you can do to help yourselves with keeping your emotions at bay is say this to yourselves every morning, every afternoon, every evening. Say it over and over again, and you know what that is. Stops are in. Emotions are out. Bear flag syndrome. Watch out for the agricultural. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.